those stories as well in a bit. Amnish Aggarwal is Senior Vice President. Prabhudas Lilladher is joining us right now to talk about whether we are going to see any serious switching of funds away from ITC to other names. Amnish, let me put it to you directly. Is it going to happen or unlikely?
You see, ITC is facing headwinds due to regulatory pressures from last couple of years or so. And I don't see a reason that the trend is likely to change anytime soon. So given that backdrop, I think there could be some redistribution of funds among the consumer space.
Sorry, I couldn't hear a word, Amnish. Some audio issue. Could you repeat that, please? Could you repeat from the beginning?
Yeah, you see what I'm saying is that ITC is facing headwinds from the last couple of years because of the sharp increase in excise duty. Now this year was the fourth consecutive year when we had more than 15% increase in the excise duty, due to which the volumes are under pressure. In addition to it, there are some other regulatory changes being proposed. So given that backdrop, I don't rule out the shift in the focus of funds from ITC to some of the other consumer names.
You don't expect that? That's what you're saying?
No, I'm saying that there is a likelihood that the funds could shift its focus partly from ITC to some of the other consumer names.
Okay. And that could be, the amount of funds could be pretty significant, you'd say, Amnish?
You see, it's very difficult to take a call on how much could be the shift. But definitely, I clearly foresee a situation where now the consistency of ITC in giving you 15 to 18% kind of a profit growth in the cigarette business looks difficult, at least in the medium term. So given that backdrop, I think ideally, yes, it should happen, but the quantum and all, I think it would be too much for me to try and to estimate that.
Yeah. Isn't it true that globally cigarette makers have seen volumes go down, but gross margins etc. have continued to increase? So why can't the same thing happen here, Amnish?
You see, globally, if you look, for example, in US markets or some of the other developed markets, the volumes have been declining not from the last, say, 2-3 years, but maybe from the last at least 10-15 years or so. But there, your taxes have been going up, but that industry per se is growing your profitability by, say, low to mid single digits. Maximum you can say 5 to 7%. Okay, the P multiples of that industry or those companies maybe say somewhere between say 16-17 times. But here in India, we had seen this company growing at a pace much faster than the global industry. Whereas globally they might be growing at say 5-7%, ITC was giving you profitability growth much higher than that. And you see, what was the second part of your question?
No, I was saying that they've still managed to increase gross margins.
Yeah, you see, if you look at the gross margins or profitability of ITC, ITC has seen the expansion in its EBIT margins or EBITDA margins by around about say 12-12.5% in the last 10 years. Okay, and the kind of margins ITC is today operating it, in my sense, it is among the highest in the overall tobacco industry globally, with the EBIT margins of say in high 60s. So although they will increase prices, the margins may still go up. But now when your volumes are declining at mid to high single digits, it's very difficult for you to give 15-18% kind of a profit growth.
Okay. There have been some talk and chatter on the street, and there have been a few newspaper stories as well, as to how and when ITC will demerge its cigarette business from the rest of the businesses. Do you foresee that as a possibility at some point in the future? And B, do you think that makes sense?
You see, some of these businesses, like for example, paper business, were earlier with a company called Triveni Tissues, and it was merged into ITC. Even hotel business came mainly into ITC by way of the merger of one of the group companies. So given that backdrop, you see, if you ask me personally, some people might say that it will unlock value, but at the same time, my sense is that if the headwinds on the tobacco industry are a long-term phenomena, then I think ITC would rather use the cash flows of the tobacco business to expand the size of the other business to a much larger size than it is having currently, rather than doing any demerger at this point of time.
So what you're saying is that the cigarette business for ITC will remain the cash cow, and that ITC would like to divert into other businesses, which isn't under scrutiny by the government and where there are those kind of compulsions aren't there, right? Taxation, etc., won't go up that much.
Yes.
Right.
Yeah.
So for shareholders, in a way, it makes sense if the company remains as one, right?
You see, there are two aspects. One is your long-term value creation and one is your near-term value unlocking. Okay. If you ask me near-term value unlocking, I don't rule out that if you split the company, there might be some unlocking happening. But in terms of, say, long-term sustainability, when you have got a large business throwing out cash and when there are some other businesses which can grow significantly over the years, which require cash, and perhaps ITC is one of the very few players in some of these industries in the other segments where it's the largest player, it has got a meaningful size, but yes, they also require some cash. So I think it is a win-win situation for both the businesses, and over a period of time, you see, if you look at the net sales today, net sales from cigarettes are less than 40% for the company. 35 to 40% is the range, which used to be at one point of time 50-60%, maybe say 5-7 years back. So there has been a change in the sales mix. The profitability part, cigarettes still continue to dominate, but I think there's a lot of change which can still happen in the sales mix and the profitability in the long term.
No. Got that. Fair enough. I just like to get your view on the ITC stock. It's about 340, 345 right now. What is your recommendation? What's your target?
You see, we have after the budget reduced your target price to rupees 330, and our rating is now reduced on the stock. Okay, and the rationale for that is that we believe that although ITC first of all will have to increase the prices, the impact of the excise duty burden is around about 9% or so, because VAT is an ad valorem tax which comes over and above the excise. So we expect a double-digit increase in cigarette prices, but because the volumes this year itself will be down by high single digits, and the kind of volume degrowth which has happened in 3Q clearly indicates the consumer resistance now increasing to the kinds of prices which have been increasing for cigarettes. So we are of the view that the kind of excise regime the company is living in now and the kind of other regulatory changes which are proposed, if they come into force in the next financial year, then the stock may continue to face headwinds for quite some time. So consequently, we have also cut our target P multiple for cigarette business from 24 to 20, resulting in this target price.
Thanks very much, Amnish. Great talking to you. Appreciate you coming on with that perspective on ITC. Thank you, indeed.